All right, so I'll be showing you how I use my COT tool, that is my commitment of traders tool, and how I come up with my analysis. So first of all, you would remember that the COT tool only works on the weekly time frame. First of all, that is the first line of action. Remember that we only pay attention to COT on the weekly time frame because COT data is released on a weekly basis. Once a week, that's when we get the COT report, and then it updates once a week. So we see the data and we make use of it once a week and on the weekly time frame. I first of all start from the 26-week look back. So I look back 26 weeks and know, because 26 weeks is half a year, half a full year. So that is 6 months. So I look back to see, compared to 6 months, are the institutions more bullish or more bearish? Are they more bullish or more bearish compared to the last 6 months? And that is important because you'll be able to gauge bias in the market. So I start with that, and I also look at the same thing for the retailers to know if the retailers are in an extreme bullish or bearish. So it's also important. So starting from the 26-week look back, you can see that the blue line, which represents the institutions, is looking like it's in the middle. And what asset are we looking at here? We are looking at the Euro FX futures. That is for the euro, the futures of the euro. So like I said, looking at the institutions right here, you can notice that they are in the middle line. They are 41%, not yet in an extreme. Because what is the extreme? This green line here and this red line below, they are both extremes. Then this yellow dotted line is showing very extreme behavior from the both of them. So now, looking at the institutions, I can see that they are in the middle. So they are neither extremely bullish or extremely bearish. Looking at the retailers also, they are neither extremely bullish nor extremely bearish. They are beginning to leave these extreme points that they were before. And remember, when the institutions were in this extreme point, we can backtest to see what eventually happened in the market, because the institutions were looking extremely bearish from 9th February. And what do we eventually see the market do? The market moves to the downside. So it's usually a self-fulfilling prophecy. The market usually just eventually follows the institutional orders, because the institutions are responsible for market movements. So going back to the COT, now that I've looked back 6 months, I also go higher and check 52, which is in a whole year. I want to compare present position of the institutions to where they were in a whole year to see if they are in extremes. And right now, what I can still notice is that the institutions are neither extremely bullish nor extremely bearish. They are coming close to this 50 level, which is a middle line here. So same with the retailers. So they are neither extremely bullish or bearish looking back a whole year. So if I still want to go 2 years, and that is the highest I go, which is 104 weeks, which is 2 years. So I go back, and what do I still see? I see that the institutions at this particular point are in a 2-year extreme in terms of orders. But for my short-term style of trading, I always pay attention to the 26-week look back, because the only reason why I pay attention to the 104 is to increase confluence. But just from the 26-week look back is already really enough for you. You don't need to overstretch yourself beyond the 52 weeks and then the 104. 104 is just to see that, okay, at this particular point it is very, very extreme, because if you see that institutions are bullish on the extreme of 26 weeks, also bullish extremely 52 weeks. If you find them still bullish in the 104 week, best believe that the market is about to turn. And if the divergence is the case for the retailers, still just always believe that the market is about to turn. And to give you an example of a trade that I took using this particular approach, and I'll still get back to a trade that I would likely take. So the trade is the Australian dollar trade. And on the Australian dollar, why I took this trade was because at this point you can see that the institutions here, at this point we are in this extreme, even overstretching to a very extreme. And how many week look back is this? This is 26 week look back. So looking back 6 months, the institutions were extremely bearish and the retailers were extremely bullish. So we are the hedge funds, and right now you can see the retailers leaving that extreme bullish position, because from last week you see that there was move to the downside slightly on the Australian dollar. So I don't just use only COT data, I also use a lot of data to eventually come to a conclusion on whether or not I take a trade. But just from COT 26 weeks, I saw the institutions were extremely bearish. Then I went to 52, which is a whole year. That was still the case. The institutions were still extreme bearish zone. And going whole 104, which is a 2 year, you still find that the institutions, we are still in this extreme bearish position. So giving me more confidence to take that particular trade I took on the Australian dollar. And another thing you might be asking is, so what happens when we are in this middle range? Do we engage? And the thing I say to that is, if we are in this range and the institutions are neither bullish nor bearish, what I usually pay attention to, the party I usually pay attention to, is usually the retailers. Because if I see that the institutions have come to this particular point, so they are neither bearish nor bullish, but I still find retail traders remaining bullish, I might still take a short trade even without the institutions being bearish. Why? Because the retailers are usually on the wrong side of things. So if this middle line is where the institutions are, or let's say they are in this range between this extreme level of 20% and the middle point of 50, I might still consider taking a sell, especially if the retailers are above an extreme line. Same case if the opposite is the case. If the institutions are in this particular zone above the 50% level, I still will consider taking a buy, especially if the retailers are in the other extreme. Remember, I wait for one party to be extreme before I start looking at positions in the market. So I hope that makes sense. And now for the British pound, which is the trade I am looking to take pretty soon, I only presently waiting to see if next week data moves one of the parties into an extreme. That would give me a go ahead to take the trade. And why do I stay away without the extremes? Just to give myself a guardrail, because it's not about the amount of trades you take. The less trades you take, the less emotions you deal with, and the less exhaustion you face in the market. So I try as much as possible to limit the amount of trades I actually take. So this guardrail is already enough for me. And would you just, let's backtest slightly and see when the retailers were in this extreme bullish level and the institutions were in the opposite, what eventually happened in that particular point in the market. So paying attention to this particular zone. So what eventually happened, you can see that the market followed up to the downside. And right now you can see that the retailers are beginning to shuffle and move back to the other level, because this was when they were extremely bullish and institutions were bearish. You can see the market turned to where the institutions were facing. And right now, you can see the institutions cooking up and moving to the bullish side of things in terms of buyers, and retailers are moving to the opposite side following price action. And what will I likely look for at that point? Definitely going to be looking for buy opportunities in the market. And that's how I pay attention to COT. So I hope this was helpful to you. And now a follow-up to observe. That rounds up this session. I hope you got knowledge from it, and don't forget to ask your questions. Like I said, whatever questions you ask me on my Instagram, even on YouTube, I'll make a video for it. And let's see how it goes this new week. Wish me luck on this challenge phase, because I just have to be patient. Even if it takes me the whole year to pass this account, I don't think I want to build the habit. I don't want to build the habit of rushing it. Take my time. Take my time. This life is not about rushing. Even though I know I want to get out of the trenches, but then it takes time. So don't forget to subscribe. Don't forget to like. And if you need access to these tools, hit me up on Instagram. I'll hook you up. And let's see how it goes. Peace.